Everyone's looking for tax shelters. The wealthy already found one that's been around for over 200 years. Yes, think of the Rockefellers, think of 8 generations, and it's hidden in plain sight. What is it? Life insurance. It's like a tax franchise. Let me show you how they use it legally to grow and protect their wealth tax-free generation after generation. So let's get into 5 points on how rich people actually use this. Number 1, tax-free growth inside the policy. So think of permanent life insurance, whether it's an IUL or whole life. Whole life builds cash value. IUL builds cash accumulation. They grow tax deferred, meaning you don't pay taxes as it grows. It could be accessed tax-free, which is basically a loan. We'll get into it throughout this video. And remember, while you're borrowing the money, you're also earning compounding interest inside the policy that doesn't get hit with capital gains or income tax along the way. So certain type of carriers have what they call non-direct recognition. When you borrow, it doesn't affect the compounding, or it doesn't affect the dividend that's in the policy as well. Something to really understand as we work through this video. So here's the second point, folks. When we talk about tax-free access to your money, what that really means, and I just mentioned, it's a policy loan. So instead of going to the bank where you have to borrow from the bank, they run your credit, you could just see what your net cash value is or net accumulation and get a loan. And what happens is it's not going to trigger taxes. It doesn't go on your credit. And once again, it doesn't affect the growth inside the policy. So what does that mean to you? If you want to access this money for rental real estate, if you want to be able to use this money to go finance your own debt, if you want to be able to buy another business, or if there's an emergency, you're not having to sell anything in your S&P 500 account or sell any individual stocks or tap into a qualified plan where it's so much more difficult to get access to your money. This allows you very quickly, within 2, 3, maybe 4 days, based on how much you're taking out, to access your money in the form of a loan. And you, by the way, get to decide on how to pay it back over time. Number 3, tax-free death benefit. And to be clear, we're talking about income tax-free death benefit, which passes to your beneficiaries 100%. Once again, income tax-free under current IRS rules. So what does that mean? If you have a married couple, each spouse has applicable credit amount in 2025 of $13.9 million. Essentially, $27 million plus is tax-free from an estate standpoint, right? However, if you're divorced or if one of the spouse passes away, well, that number gets factored in as well. So if you're a beneficiary and you're a child that's under 18 and you get left $1 million and you're 15 years old, well, that million may be tax-free, but if it earns interest from 15 to 18, that interest could be taxable. It's important you understand these little distinctions, and to learn more, you may want to go ahead and click that link below. We're having a virtual live event on April 10th at 8 p.m. on the east side, 5 p.m. on the west side, to dig deep into what all these things look like when it comes to taxes, life insurance, and proper planning. But keep in mind, when it comes to the death benefit, it's one of the cleanest ways to transfer wealth outside of the probate and income taxes. Why? Because it's direct beneficiary. It's not a part of your will. Remember, anything part of your will goes through probate, and probate could become a little bit sticky. It could be time consuming because you're at the mercy of the courts and the judges. But when you have death benefits and the beneficiaries are direct, it is extremely clean. And this is why, if you think of the waterfall method when it comes to what the Rockefellers did, the beneficiary for all those folks in the Rockefeller family tree over the last 8 generations, the beneficiary wasn't a human, it was the trust itself. And yes, you can make a trust the beneficiary. Number 4, a hidden strategy for high income earners. And let me just pause for a second, and I'm going to be real clear. We're not talking about do life insurance and nothing else. We're not talking about have a after-tax brokerage account and do nothing else. We're talking about how to integrate and coordinate. So when you max out your 401k, your Roth IRA, your SEP IRA, your pension plans, where do you go? Well, the wealthy use, and this is important, overfunded life insurance as a private retirement plan. We already talked about the tax advantages. It doesn't come with its own income limits, contribution caps, or required minimum distribution. So in other words, I have an IRA, I have a 401k, I have a cash balance defined benefit plan. By 73, I'm forced to take money out no matter what. And when it comes to a Roth IRA, there's only so much I can put into it. Or a Roth 401k, there's only so much I can put into it. Or if I'm over 50, a profit sharing 401k plan, there's only so much I can put into it. When it comes to life insurance, based on your health and based on your medical history, what you look like, as far as like, the time frame the insurance company thinks you're going to live, including what does your financial underwriting look like. You could stuff these things like a pig and put a whole bunch of money in there. So it's important you understand it doesn't discriminate from a standpoint of what you could put in or when you have to take it out. And it is truly a Swiss financial army knife when you really put all these things into place, because if you do have that 401k, if you do have that life insurance, how do they integrate and coordinate? Because in the end, it comes down to what kind of money you get in retirement on a monthly basis. During your working years, what kind of money are you using from a liquidity standpoint to put into other investments? And most importantly, how do you transfer the wealth in the most tax-efficient manner? Yes, we're going to talk about the GOAT number 5, which is the Rockefeller method. And if anyone likes basketball, Michael Jordan is the GOAT to me, not LeBron James. I'm just saying. The Rockefellers are the GOATs. They use life insurance to build tax-free family trusts, fund every generation, 8 of them, and avoid estate taxes along the way. They didn't just pass down wealth. They passed down control, information, strategy, mindset through strategic policy ownership and funding mechanisms that still exist to this day. And remember, in that trust, there are certain rules, regulations, requirements that each and every Rockefeller must live by. So if you truly want to learn more, if you're tired of feeling like taxes are eating up your future as well as your current lifestyle, and you want to learn how the wealthy legally sidestepped that problem, join me live on my virtual event on April 10th at 8 o'clock on the east side, 5 o'clock on the west side. And we're going to break it down 3 ways. Number 1, how to structure life insurance for max tax advantages. Number 2, real strategies used by high net worth families that we could prove to you. And number 3, how you can use this right now, no matter where you're starting. Our seats are limited. Reserve your spot now, and I assure you, you'll walk away with more information than you did when you showed up. I'll see you on the 10th of April.